Yeah, well, look, the more we learn about Tesla, the more we really get concerned about the probability of legacy automakers really generating their return on cost of capital in EV investments, or even a positive return on capital at all. And so just like we're learning with oil and gas, if you defund that too fast, there are consequences. There are social consequences. There's inflationary consequences. And I think the same might be also applicable to the defunding or the phasing out of internal combustion. It's engine. It's easy to talk about. Going to 50 or 100% EVs in a decade or so, another thing to do it. So we think that chances are that your viewers and our investors, our investing clients, might be underestimating the value of internal combustion's duration more than they're underestimating the value of EVs to, say, a legacy automaker competing against Elon. It's a pretty daunting task.
But you still don't think people should be buying those stocks like GM and Ford on that view, right? Because you think it's too hyped, the EV plans?
Well, it's the reason why we don't think it's time to, that we don't think our clients will be paid for this year or so owning GM and Ford is because all that cash flow coming from internal combustion sales, which is going to be there for many years, is being plowed into very risky investments and largely unproven plans to scale production in a highly capital intensive, highly competitive EV business. And so it's that combination of expensively priced cash flow coming from the internal combustion. It is a lot of cash flow, but it's very expensively priced, precious capital invested in a way that we think has lots of ways to not win. So yes, no, we're not recommending GM and Ford. It's hard for us to recommend those companies as long as Tesla's around and we see the Musk economy continue to blossom.
In some of your big picture recent research reports, Adam, you've been talking about the Muskonomy and some of the areas where he might deliver profitable innovations over the decade ahead. And one of those areas is tunneling. Before we get specifically to that, I was interested in one of the conclusions that led to you to think that could be such a big opportunity, which is that traffic in cities is going to get worse when autonomous driving becomes a thing. Isn't it the assumption of the street that the opposite is the case?
It's the hope of the street that if you can use a car more than 4% of the day, we can all fill our bodies into these cars and get along and all go and share a journey. But if you look at some of the experience with shared mobility and, names like, the shared mobility companies, you've seen kind of the opposite unintended consequence, right? You could talk to any city planner, MTA, about what's happened to traffic when you have had shared mobility come in. It's not been what was promised, unintended consequence. And so some of the scenarios we're running, Wilfred, of autonomy, and Elon talked about this on his last call, when you take the cost of that mile traveled and you get it towards zero, some of the traffic outcomes are horrific, if not dystopian. And so humanity is stacked in cities in 3 dimensions, and transportation is stuck in 2 dimensions. And we need to find a way to go up or down. And we think that the Muskonomy, and particularly the Boring Company, is if this is happening, Wilfred and Sarah, they're going 3-dimensional into the Earth's surface. This is not fantasy. They're working in multiple cities to try to take pressure off surface transport. And in the process, we think it's going to involve Tesla and their hopes and their abilities to get into the infrastructure space.